Good morning, traders. It's 8 a.m. Chicago time on Wednesday, the 28th of June, 2023. This is episode number 2492. Do I sound like a broken record to you? Repeating the same thing every morning? Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So, what do we have here this morning? We've got in our convergent pre-market summary sheet, again, to get the sheet directly, all you have to do is follow on Twitter, set your notifications, twitter.com/conv trading, CONV trading. You can find that at the bottom right corner of the sheet there, the URL. Of course, I hear from a lot of you that you don't like to give your information to social media companies, these tech giants. And the fact is, you don't have to show your passport. You just supply, create a persona, birth date, first, last name, even address, whatever. All of it fake. Sign up with that. Let them do with that what they want. That's what I often do. To avoid having all of my stuff get mined. Although I joined Facebook very early on, so they've got a lot on me. But it's just, this is a way to keep up. The overnight posture is mixed this morning. You can see that the NASDAQ, where it opened yesterday, up about 60 basis points. It is down about 40 basis points. But everything is within a couple of rotations of break even. So the European markets are offsetting the U.S. markets this morning. The Eurostoxx 50 leading with 76 basis points increase this morning from yesterday's settlement. What's driving things? What's driving things is a couple things. The main piece being this thing with NVIDIA and the U.S. Curbing the export of AI chips to China amid concerns it could use them for weapons development and hacking. That's a big piece. That's impacting NVIDIA. It's impacting AMD. I believe they were down about 4% this morning. Italian CPI lower than expected. The Eurozone CPI is due on Friday. The ECB has all but promised a rate hike in July, and followed by another one in September. But we'll see how that plays out. It's quite a while to September. A lot can happen from here to September in the macro picture. MBA mortgage apps higher than previous. U.S. considers new sanctions. We talked about this. Apple has no plan to transfer supply chain out of China, according to Foxconn, although there are reports to the contrary. Google having productive conversations with EU regulators about bringing in regulations for AI, according to its cloud CEO. UBS to cut more than half of Credit Suisse's 45,000 workforce. That's bad for Switzerland and globally, really. The integration of Credit Suisse into UBS finally shows its teeth. This morning, as far as releases, we did get the GfK consumer confidence out of Germany. Came in a little bit worse, negative 25.4 versus negative 23 expected. Consumer confidence out of France, 85 versus 81 expected. So that's pretty good. The mortgage numbers we went over. We did have ECB's in RIA. And then we got retail inventories, goods trade balance, and wholesale inventories this morning out of the U.S. Wholesale inventories negative 0.1%, expected positive 0.1%. There's not much there to cover. And then now we're looking at Case-Shiller. Case-Shiller, I thought we covered these already. Yeah, I think Case-Shiller we've already covered. I'm not sure why it's on the calendar. Yeah, something's so 9:30 today. We do have yes, we do. Okay, we have ECB's Lagarde at 9:30. We have Bank of Japan's Governor Ueda, and then we have BOE's Governor Bailey, as well as Fed's Chair Powell at 9:30. That's right at the open. Right at the open. Crude oil inventories at 10:30. Crude oil, we're looking for a draw of 1.757 million. In gasoline, we're looking for a draw of 126,000 barrels. Crude, some news on crude this morning, actually, that Russia now has the lion's share of the supply to China. Russia, this kind of explains why crude is just not able to get above 70 and stay above there. The Russian crude oil wasn't pulled off the market. It simply found new buyers. So Russia taking over from Saudi Arabia as the biggest supplier for China. This is a big deal as they pay for the war effort. We do get Lagarde again at 11 a.m. today, 11 a.m. Eastern, and then we have the bank stress tests after the close today of 4:30. Expected to be relatively muted. Business confidence out of South Korea at 5 p.m. Retail sales out of Japan at 7:50, and then retail sales out of Australia at 9:30. Looking at the S&P is completely balanced. I mean, holy cow, is it balanced? 175,000 contracts traded this morning. 100% of the inventory is short this morning with 10.5 points of range. That's really bad. 10.5 points. It's just, there's just not much there to play with. The point of control has shifted dramatically higher to 44.1150. So let's take a look at yesterday. But first, I talked about this yesterday a little bit. I talked about the fact, if you recall from earlier in the week, we talked about this 70 level. I'm sure you heard me discuss that this is a really key test. The 4370 level, and we hit it. There was an equivalent level in the NQ. We hit that. And what I talked about yesterday was look out for a short squeeze into the session. And one of the things to observe, and this is from yesterday's video here in front of you, one of the things to observe is the slowdown. Let me enlarge this. The slowdown in the way the point of control moves. It's a relatively consistent, unless it's news driven, it's a relatively consistent marker. You could have price action doing whatever, but to me, it's value. Value in the point of control and the shifts in the point of control really speak volumes about what the market's anticipation is. And so I drew this. I drew how it accelerated down, but we see a deceleration as we push into the 70 level. And so the expectation is it is likely to turn and mount a rally from here. And that's what we got. And then I think a little bit later on, I talked about the 44.16 coming back. There it says, come back probably to the 44.16 for a retest. And I started to draw the 44.16 right there. There it is, the 44.16. And that would be our target to the upside. So we, like I said yesterday, we've tested the extreme imbalance on the upside. We've tested extreme imbalance on the downside. And then we go back to balance. And then what we would expect in this situation is we would expect the market to be boxed in for some time until there's something new to price in. Now, we don't have anything new to price in. We do have a really important number on Friday, important number in terms of inflation on Friday. That's the PCE release. We want to pay attention to that. The core PCE price index comes in on Friday, expected at 0.3%. We do also get the inflation numbers out of Europe, but that's not going to do anything either way. But we do get PCE and core PCE on Friday at 8:30 Eastern, and that's the next big number that's expected to reprice the markets. Remember, the markets don't move because there's a moving average there. The markets don't move because you know, Goldman Sachs controls it or whatever. The market moves because of the aggregate participation or anticipation of a crowd in terms of where value is, and where value is to different people at different time frames is a function of what they believe needs to be priced in and what they believe the impact of that would be. If you don't anticipate that the market will go higher, you wouldn't buy today. If you don't anticipate that the market is done rallying, you wouldn't sell today. And so selling today is an anticipation of what's going to happen in the future. And if there's not much on deck, not much news or whatever, there's a tendency to just hold steady. Why transact when there's nothing new to price in? So now that we're back, the point being, now that we're back, baby. We're back right at the 44.16. Yesterday, we settled at 44.1875. We went to 44.2475 and then started building this this big high volume node right on top of balance. So just like I mentioned yesterday, the auction is quite orderly. It is behaving quite normally. And the only problem that we have right now is that the volatility is not there, so it's super slow motion. It's very slow motion. You almost want to run it at 4 times speed to see it more clearly. But yesterday was relatively clear. Yesterday also left 6 strings of singles. 1, 2, 3, 4. Is it 5 or 6? I guess it's 5. 1, 2, 3, 4, 5 strings of singles. This gives us the idea that down to the 91, and I'm rounding here, down to the 91, we have relatively weak structure, right? So between 44.16 and 91, we're probably due for a revisit at some point. I don't expect us to take off from here very easily. The structure beneath us is relatively weak. Here's what the action was yesterday. Let's reset this. There was quite a bit of absorption on the way up on the rally, which is fairly normal in this kind of environment. The delta did not participate very well. If you look at the delta versus price, the delta was very poor. So what we had is the market lifting against limit orders that are being absorbed. Those are the blue dots. Then you have, as that gets done, you have the market hitting the bid as it's climbing. So that's negating the delta, that's resetting the delta back. So there was interest 2 ways, and we are very likely, as a result of that, we're very, very likely to go into balance here today. And we have, we have a pretty decent magnet up above, right at the 44.19 and 18.75 settlement. So I'm watching for that. Overall, the overnight session is balanced and sideways. We have a weak low in the S&P. You could see those 2 bottoms against each other. It may actually seek its way down to 4,400, but really, I would suggest you keep a close eye on 91. 91, that's the equivalent of 43.70 earlier, right? This the base from which this rally has occurred, and it cleans up a weak structure that was left behind. If it takes out today's high, it really, I'm not expecting it to push all that much higher. There's not all that much up above. We do have a zone in the 30s, in the 44.30 or so. That's the next area to test. but overall today is expected to be fairly choppy. That's how things are laying out. Looking at the NASDAQ, the NQ did nothing but to take back what it did the day before. So we sold off pretty good on Monday. Remember, I was saying on Monday the NASDAQ is relatively stronger than the ES. The NASDAQ caught up with the ES. It ended up pushing to that 14,870, 866 area. That's down here. That's this area right here. Cleaned up this weak structure. And I warned that this has moved from low volume node to low volume node, and it's very likely to come back. And where did it come back to? It came back to the high volume node. So you can see the NASDAQ closing at 15,111, which is around the high volume node area, which is around 15,080. And then this morning it's off a little bit. So the NQ has this zone between 15,111 and 15,000. So I'm expecting chop in the NQ today. Looking at, and those are the reasons why. We still have one-time framing down the NQ versus the ES, which has broken its one-time framing down. The NASDAQ's more likely to chop today, and it's weaker, especially with this NVIDIA news, than the ES is. Here's crude. Crude, man, yesterday just couldn't get it off the ground. Crude really valiantly, it opened in a gap, went right back to the prior settlement, and then came right off and closed on a neutral extreme down day in crude. Very bearish outlook here in crude. And it's no surprise that this news came out today that the Russians have just been, just selling their crude cheap to China. There's just that supply is not off the market. China is not buying that from other places that we can account for. So there's a supply problem here in crude, and that's why it's been very difficult for it to hold longer prices. Maybe, I don't know. The problem with a physical product, with a physical delivery product, is just that, is that sovereigns have deep pockets, lots of credit, and can really push things around, and therefore they can wipe away the technical picture of that product. But don't forget that the technical analysis is not really supposed to detect or predict these geopolitical decisions. Technical analysis is only supposed to tell you what's actually happening. It's like your speedometer in the car. It's not really supposed to predict what the traffic will be like. It's not supposed to predict construction on the road. It's not supposed to predict these bigger things that can impact the overall outcome, the weather ahead, all that stuff. The speedometer is only telling you your current speed, and based on that, we can project our progress or arrival time and things like that. So technical analysis is your dashboard, and the macro or fundamental analysis is everything else. What traffic patterns? Is it a holiday? Is it not? Is there construction? Is it not? Is there not? It's a lot more difficult to look at fundamentals, and I think a lot of times macro analysts are just very good at spinning up a story. To be honest with you, that's just my personal opinion. But they're pretty good at telling us the picture. They're pretty good at telling us that, hey, this time of year there's a lot of traffic, or hey, this time there's a big construction contract on this road, and therefore, silly analogy, I know, but it gives us an idea of what to expect, despite what our speedometer and tachometer and all this stuff and our GPS is saying. These tools, instruments are technical analysis, and they're still valid in whatever product, but these products are controlled fundamentally, and it's difficult to predict consistently what they're going to do when these governments are able to act on either price like OPEC does or supply like OPEC does. Um, and that's the thing with crude. So I'll leave you with that. Very simple. Remember, we drew these lines, we drew these levels. They've been here for quite some time, and we see that the big retest area held, and we are back at this big point of control. And just be wise enough to know that it's more likely than not to rest here because the volume is there. The profile says that it's very, very likely to like these prices. Why? Because we don't have anything new to price. We just don't. And so today, despite the rally yesterday, I'm going to tighten up my stops, tighten up my targets, and trade in anticipation of more of a balanced and short-term trader-controlled market. Okay, that's the key thing I want to leave you with. Good luck today, and don't forget to hit the like button and subscribe to the channel. It's free if you have not subscribed. We'll catch you tomorrow morning. Take care.